There is a window of opportunity that exists in the gold market right now that will most likely close by mid to late September. The last time we were in a very similar situation to this window of opportunity, gold gained 15% in a matter of several months. And the time before that, it gained over 50%. In this gold market commentary for July 13th, 2024, I'm going to explain what happened in the two previous times that we saw a similar market setup, how gold reacted, and why silver is probably an even better buy today. Please stick with me to the end of the video for that. So let me get on with my commentary. I'm Dana Samuelson, president of American Gold Exchange in Austin, Texas. We are a national physical precious metals and vintage US and European coin dealership going back to 1998. In today's update, I'm going to talk about gold is poised for a new breakout. Inflation is easing, treasury yields are falling, but the Fed hasn't cut rates yet. We're in the same setup as we were in May 2019 before gold gained 15% at that time. And we're in a similar setup to 2007 before gold gained 50%. And as I alluded, silver is testing a breakout right now. So let's get into the charts. This is a inflation chart going back to 2000. You can see off to the right, headline CPI, Consumer Price Index, is down to 3%. It's been edging lower for the last 3 or 4 months. It's testing 3% for the second time. It bounced off of 3% about a year ago before puffing up and giving everyone a cause to concern that inflation may not ease. But now we're seeing core CPI coming down as well. And this has been good news for the Fed. This is a report from just last week. And here are a couple of headlines off of Bloomberg. U.S. inflation broadly cools, likely sealing a deal for a Fed rate cut. Gold likes it when yields fall. Gold holds near record as Fed rate cut optimism mounts. So gold's puffed back up to the high end of the trading range in the past week as a result of this cooling inflation. And finally, Bloomberg says all signs point to a U.S. rate cut come September. And that's the window of opportunity that I'm talking about. While Treasury yields are falling before the Fed actually cuts rates. So let's look at what happened back in the 2007 timeframe. This is a chart that shows the federal funds rate in black and the 10-year Treasury yield in red. Both peaked twice, along with the 10-year Treasury yield, at about 5.25% in mid-2006 and again in mid-2007 when the Fed funds rate was steady at about 5.25%. Before both started going down, gold was $660 an ounce. Just about a year later, as the Fed dropped the federal funds rate from 5.25% down to 2.25%, and the 10-year Treasury yield fell from 5.25% down to about 3.5%, gold gained 50% to $990. During that time when both the 10-year Treasury yield and the federal funds rate were coming down sharply. That's 2007, 2008. Now let's look at a chart that takes us to today. This is a similar chart showing the federal funds rate during the Fed rate hike cycle going all the way up to 5.25% and holding steady right now. In red is the 10-year Treasury yield. You can see that it's pumped up to just about 5%, still under the federal funds rate this time. But what are we seeing now? Rates are falling on the 10-year Treasury yield. But the federal funds rate has not started coming down yet. This is the window of opportunity that is open for us right now. Yields are falling, but the Fed hasn't started cutting yet. And that's what the circle on this chart shows us. This is the similar chart, different time frame, January 2016 to December 2020, a 5-year chart. Again, the federal funds rate is in black and the 10-year Treasury yield is in red. At that point in time, following the great financial crisis and the slow gaining global expansion that rolled over into a global contraction, The 10-year Treasury yield peaked at about 3.25% in October of 2018. Then it started to skid. Meanwhile, the Fed didn't get the Fed funds rate all the way up to 2.5% until December of 2018, where it stayed flat while the 10-year Treasury yield was falling. And in the spring of 2019, the yield started to fall more aggressively. That's the downtrend that we're seeing on the chart at that point in time. Yields falling before the Fed cuts rates. That's exactly where we are right now. So let's see what happened back in 2019. Well, we put out an email when we saw this setup to our clients. We called it the turning point when gold was 1330. It had moved from 1270 to 1330 with nothing else going on. And then I looked at treasury yields and I saw they were collapsing. And I said, oh, this is the key that's going to unlock the door for higher gold. And sure enough, that's what happened. Within a couple of months, gold had gained 15% to 1520 when the Fed made their first rate cuts. And that's where we are today. Now, ultimately, we got into COVID. The Fed brought the federal funds rate down to zero, and gold gained 55% from 1330 all the way to 2070. I'm not saying that's going to happen at this point in time, but I do think a gain similar to the one we had when gold went from 1330 to 1520, or a 15% gain, is likely in the current market where we have a flat federal funds rate but falling treasury yields. And every indication is leading to the fact that the Fed will most likely start a rate cut cycle in September. And that's what I mean about the window of opportunity being open right now. So if you're going to sell gold, don't do it yet. If you're going to buy gold, I think you've got a great opportunity to do so in the next couple of weeks, maybe a month. It's possible that the treasury yields could get ahead of themselves and push gold higher sooner before the Fed makes their first rate cut, which the market is gaming now at about 80%, I believe, will be likely at their September meeting. So here's a hard gold chart. You can see where we were on gold back in 2019 when it was still under 1375. The Fed cut rates and it popped up to 1560. Then when COVID hit and ultimately the Fed took the rates down to zero, gold went all the way up to 2069. Now, I think we're in a similar situation right now. Here's a one-year gold chart. You can see how gold has already made a big move from 2040 with a double peak over 2400. It's testing that peak again all the way to the right at 2421 just this past week. But I think when the Fed actually cuts rates, we're going to head into that yellow territory, which is higher still. And a 15% gain from 2400 is 2760. I think gold is likely to go in the 2600 to 2700 range for about a 10% gain. Because the markets are already gaming some of this in. We look at a 6-month candlestick chart, you can see gold is testing its previous two all-time highs of 2448 and 2454 on the candlestick chart. It's looking really solid right now. And for gold to puff back up over the last 2 weeks in July, during the 4th of July holiday, when the market is normally very quiet, this is a very, very bullish sign. So I think this looks very promising for gold to go higher. The window of opportunity is open right now, and it could close at any point in time if the 10-year treasury yields start to really tumble, or if the Fed surprisingly were to announce a rate cut in their July meeting, which is next week. I don't think that's likely. The September rate cut, everyone's anticipating the Fed will cut rates in September, and we are seeing some more cooling signs of the U.S. economy, which will give the Fed more cover to cut rates in September. Let's take a look at silver. Here's a one-year silver chart. You can see that silver has clearly broken out over $29, a high above which it had a lot of trouble getting over for the last 4 years. But now it's firmly over $29. Every time we get down to about 29, it gets bought back up. Right now, we've got a peak at 32.50, and just the last week or so, we've started to try to test that again. Here's the candlestick chart showing a similar pattern to gold. With silver holding $29, they've tried to knock it down below that twice and failed both times. And we're back into the 31.50 range right now with the bias towards the upside. Going back to that 6-year gold chart I showed you earlier, remember gold hit a triple top at 2050 before it finally tested 2050 and 2070 and was able to break out. I think silver is doing the same thing right now. It's testing a new breakout, which should probably take it into the low 40s from about $31 right now. Remember, when silver plays catch up, it tends to play catch up with a bullet. And a 10 or 15% gold gain on a Fed rate cut would open the door for silver to really play catch up with a vengeance. And I think that will put silver closer to $40 an ounce, or probably over $40 an ounce were that to happen. So the window of opportunity is open right now. Speaking of silver, we have a silver special on right now. Survival silver junk 90%. 99 cents over spot, the lowest premium we've had in years. We have plenty of 90% available right now. That's a good deal. So again, we are American Gold Exchange, a national physical precious metals mail order dealership out of Austin, Texas. And as always, thank you for your business. Thank you for your loyalty. Without clients, we don't have a business, and there's never a day goes by that we forget that. So thank you so much. If you like what we're doing, please subscribe to our video channel and like this video. Help us get a little social media traction. I do appreciate that. So have a great week. We'll be back in touch soon.